This is just going to be kind of recording the session to some extent. The morning session, what I'm seeing in the tape, what I'm seeing overall, um, just kind of discussing like the first hours ish of trading. We obviously have this small gap up that happened off of news, Trump China talks. But I think in the context of this chart, the context of where it traded to in terms of spine QQQ, the court ruling highs, the exhaustive look that occurred yesterday, and currently kind of what I'm seeing as well in terms of in the order book, the orders that are being stacked. I think this was a large opportunity for some sellers to offload inventory, and I still think we're in this vulnerable window short side. I mean, Nvidia, I just saw this fat order stacked at 143, where we're seeing a lot of volume and aggressive seller showing his hand off of open across the board. But Nvidia mainly at that 142 spot. And like I said, the exhaustive volume is very reminiscent of how, we see these buyers kind of get trapped and fizzle out into data, into news being the catalyst. And we're still within that window that ends June 9th, where I'm going to really try to slam the short once more. Um, I did end up flipping the SPY, right? I was short Nvidia. I took a pretty big loss on that. I had a good amount of money in there. But I just was a little bit early. I kind of strayed away, long story short, kind of strayed away from my plan. My original plan was to build out a SPY position in this 597 to 598 range on July's midweek into data to see if we could get that push to 579. But I kind of jumped the gun on Nvidia position and ended up taking a really big loss yesterday for about 20%. Establishing what I thought would be a lower high, but didn't end up being one. Well, I mean, I don't like this long. Like, this is still a viable short. I still think that position works. I just went a little bit aggressive with my expiration, more or less. Just, I had June 20th here, and then I added in throughout this day. I closed down like 30%, and then I covered on yesterday, down 19%. Really stupid of me, but I kind of let some noise get into my head and strayed away from the positioning that I was really confident in. I still do think this works, though, 100%. This is an absolutely abysmal chart, and I still think within this window we can get a vulnerable move short side. Um, but I'm gonna take a look. Like at that point, I was risking so much on said Nvidia trade that it could have blown my fucking portfolio up if it didn't work out. You always have to be aware of the potential outcomes um, that can happen, and I'm not really prepared to do that. So I flipped to SPY yesterday around 597 was where I began to take some ads. I took another couple off open today. I took one off open today. I'm break even right now in July's. Like I said, looking for 586 to 579 um, within this window, right? Obviously, if I don't get anything tomorrow and I don't get any leeway over the weekend, I'm going to cut the position and just flip long. More than likely flip long Tesla down here if we can get some kind of structure in the CPI. But I don't know, just kind of a mistake on my part. I was relatively break even within this range. I mean, I started positioning short the 14th, or the 15th on SPY. Um, Built it out, had about of the size I wanted on OPEX, and then I tried to bid what I thought would be a lower high. On the 19th, instead of kind of understanding the fact that we have this move happen after hours on the Moody's downgrade post OPEX, we probably will see a stall at the highs of that range and the gap fill to begin that week, especially with the move happening after hours and expiration the following Wednesday. But I had about 20% drawdown max, and I just ended up covering it all. I mean, this was a really good target at 581.50, but you want to cover de-risk and then watch how aggressive the buyer is and see if the draw is a little bit lower. And that buyer was really weak throughout that range. If you watch the intraday price action, and then we get our first notable sign of a bidder throughout here. Instead of having that profit locked in, holding a couple runners over the weekend, risking some profit, I ended up taking new risk over the weekend and taking a pretty big loss of about 28% on the 27th gap up, retrying the short within the 592 range and breaking even. And like I said, this week, I was waiting, and the 27th loss essentially broke me even on the entirety of the short, which, is my fault. But essentially the entirety of this range I was flat until I took that really big NVIDIA loss that was, like I said, pretty unnecessary. Um, Pretty unnecessary. I just flipped my script a little bit. Didn't know if we'd see 597 on SPY this week, and thought I could, front run NVIDIA a little bit. Like I said, I still think it works, but I'm by no means prepared to take such a loss. So a pretty big order on Amazon. A lot of these names, I will say, I mean, this is a gap fill from the 15th. This is the 140 to 142 range. It's very pivotal and notable for the NVIDIA chart. Um, um, Microsoft is giving you just such an exhaustive look, in my opinion. Like such an insanely exhaustive look as it's the same kind of sequence following the January gap down off of the report. The draw is going to be into that range in terms of supply and demand, right? It's just how these things move. They're going to draw back into these gaps, especially a name like this that's relatively liquid. And you have a lot of volume traded on it. There's not going to be as much of a demand up here as there is within this gap, potentially lower overall. There's going to be a lot of selling going on within these ranges. And you can, to some extent, kind of see the passive selling, I guess you could say, more or less the exhausted bid throughout the entirety of this range. This is the end of month flows, so I take that volume with a grain of salt. But even just Tuesday and Wednesday's candle, the low volume, the gap down to begin the week, and just the unappealing look alongside. But these things can stay relatively irrational for a while, right? And we're getting a really nice shred here, which is phenomenal. Have to see how this holds. 595 is a pretty big spot. That's the May 19th high. Same with 526 here on Qs. And I wouldn't mind getting some exposure under there. I have a good amount of size on some July puts, currently green like 3%. But I want to hold this for potentially getting some ads at 598 or on a lower high that we subsequently develop. But I just see a lot of confluences within this window. The flows return on the 9th, right? So there's only a few sessions left to really see if this can get going. But I feel like the context of this range, the way that it's trading, a move can happen and it can happen relatively quick to shake things up and then spark a leg into June flows. Obviously, those June flows don't become very aggressive until the week of the 16th. But in terms of the window that I'm trading within this, I'm kind of going on a window by window basis, a week by week, a month by month basis. Week by week, I'm starting, I'm not really aggressive with the shorts the week of the 28th and the week of the 5th. I kind of start sizing in the 12th, and then I get a little bit more aggressive on the 19th, and then the week of the 27th, we had a shorter week, and then this week as well is when I've been a little bit too aggressive. But, this thesis kind of ends when the window closes for the short side. But I do think we're seeing a lot of confluences. I think, you're seeing XLF. There's a larger seller on the Tuesday tape as well. Within this initial attempt in the Wednesday, May 21st gap, which was that expiration candle. We see a relatively unappealing candle closure. Not a lot of volume behind it yesterday, but not a appealing candle by any means necessary. We have a gap to fill from the 27th, right, which we have, across the board on SPY and QQQ. That'll kind of be my target within this range. I'm not shorting this. I think that this takes a while to build out, maybe another month or so. But a new low, kind of establishing a floor of accumulation here that can be broken and then pinned under, similar to how we had it in February to mid-March, would be something that I would keep an eye out for. Mags does not look good. Semiconductors, it looks like these are potentially front-running the AVGO report. I don't want to speculate too much on that, but this is just rallying on these kind of I don't know. I'm just not very appealed by this. Right, the MU chart is one of these that is outperforming substantially. In all honesty, and when you kind of look at the weekly perspective on things, it doesn't look the worst. You have two inside bars on low volume, following a 6 point or a 14% week, the week of the 12th. Now you're up 14% this week, kind of absorbing the seller under 98.20, right under that earnings gap. He shows his hand. You see the lower volume in the buyer within the Wednesday or the Monday, May 12th gap. You see the pop, another seller showing his hand, the higher low established on the last day of the May candle, and then the rally on Monday, and then the reclaim of this previously absorbed resistance and peg earnings candle, and then you get the continuation here. But it just doesn't. It isn't there for me, and I don't have an issue with missing out on longs in the window that I'm not long focused. Um, like this is a name that I said you could, you have this floor of accumulation at 85. You have a notable bidder throughout here with some volume behind it on the report, on the DeepSeek candle. And then you have this massive liquidation, right? And I think that was Druckenmiller. He had a large position on this. But also, I'm not going to, I said this could potentially be that spring, right? Oh, we have a pretty large ask on the QQQ order book at 529.70. 30,000 lots. That's going to be something I keep a pretty big eye on here. I said that this could be the spring, that the massive change of hands, the massive selling that offers an opportunity for that counterparty to buy it, but we never really see a structure that I'm super fond of. Yeah, this is potentially appealing, but am I, really gonna buy that? I just don't think I am. I don't think I'm long within this window, and I don't really have an issue with that at all, right? And that's how I trade my system, and more times than often it's benefited me. There's obviously been some times where maybe I missed some shorts because it wasn't within the window. Maybe I didn't capitalize on some shorts because it wasn't within the window that I wanted, and vice versa with longs. But I do know that, more times than not, I've been able to execute accordingly and slam the opportunities that I see because of such a window giving you that confluence and giving you that added confidence and such a biased, a directional read to some extent, right? Okay, and that order's gone. That order is gone now. Just little things like that. Like I don't mind missing out on this rally, I guess you could say. I don't see any opportunity to take long exposure within the entire month of May, except for a very speculative positioning off of the GDP report, or I guess that was April 31st, into the reports of Microsoft and Meta. See, this right here, I mean, I just kind of look at the context of a lot of these semiconductor names that have been in higher time frame distributions for a while, and I'm just not a fan. Obviously, anything can happen on this report, but look at where the volume comes in at. Look at what kind of volume you see, where it comes in at each new high. You have a buyer down here, but nothing in comparison to what we see the week following the report, to what we see the week in June. Even what we see the week in March is not, I mean, obviously not as aggressive, but it's just understanding where the, pretty large seller, 141.60 on NVIDIA. 141.50 has a decent little bid set. I think he just got wiped. I'm sitting green about 7% right now. I have some good size. I don't want to take any more ads here. But I would expect that Wednesday print to kind of be the top. These sometimes do tend to top out on Wednesdays, especially with midweek data like we have. But I mean, even just this ABGO report, it's just, I'm not appealed by it at all, personally. But, these things kind of take time. Schwab, like I said, this is going to take a while. RTX was a good one, but I just don't, I mean, this is actually really hideous. I just don't really want to trade it. Pretty fat. I mean, obviously there's not 16 volume trade on this print, but a notable seller at 138 after hours yesterday. I guess pre-market this morning. I don't know. This is a distribution that I talked about. 4 highs, a preliminary sign shown in October of 2024 from the report. following a pretty extensive move off of 2023 lows, right? There begins to be, that profit taking 100% on a name like RTX after this June or July earnings report. There tends to be a lot of profit taking. There tends to be a lot of selling, after such an extensive rally at the highs, and you subsequently see that on the aggressive legs that follow, the notable footprints at highs. And, you had a potential opportunity here. Like I said, compare this to the Q1 2025 NVIDIA short that I had and the Q1 2024 March or DraftKings short that was there as well in terms of these distributive UTADs of this falling range and leaving that breakaway gap kind of undigested. That's going to kind of be the draw. And you do see a larger seller on Tuesday, but it's really nothing that I would execute on, especially because it's a relatively slower moving options chain. And obviously, we're seeing a little bit of continuation, but the exhaustion is notable in my opinion as well. I mean, this right here, like I said, this is a very hideous chart. I don't think that the distribution is complete. I don't think that the accumulation is strong enough and built out and established or mature enough to outweigh such a distribution that has been occurring since March of 2024, in my opinion, on a lot of these semiconductor names. But you have to understand the window, and it's very notable that this April sequence occurs at the beginning of Q2. The positioning under the hood, and I do genuinely think that something large happened down there, and not obviously there's a lot of buying, right? There's also a lot of selling. Um, I love looking back at old tweets of people April 4th saying, "Don't buy stocks, the market's fucked, everybody's rotating money out." That's the best time to buy, and that's another thing with that window. I was waiting for that April 7th window. I was waiting for the clear potential change of hands to spark an actual reversion trade off of the lows, and we got that. And I mean, obviously, in hindsight, it's very easy to talk about it. In hindsight, I didn't slam it as much as I wanted to. It was a little bit difficult for options, though I will say, but nonetheless, it's Amazon has some pretty big asks. It's very interesting to me, the human behavioral patterns of how this happens. Um, but also, something big happened down there. I will say, like, some big party stepped in to save the market. Some big party injected a lot of liquidity into this market, and it happened at the beginning of the quarter. And I think that the ramifications of this are going to, go all the way to the beginning of Q3 and of Q2, where we see, that heavy call skew on May expiration. Very heavy. An anomaly in terms of um, the put to call ratio, and we're going to see a very similar sequence in June, and we're going to see a lot of those calls be in the money. We're going to see, we're going to see a lot of those calls be in the money. We're going to see a lot of that um, delta be relatively high, and we're going to see a lot of buybacks from market makers. And like I said, with those calls going in the money, the delta exposure, the delta is a little bit more aggressive. I don't really know the math behind it, I guess you could say. But the higher we go, and the more that those decay, especially if they're negative delta, and those decay, and they decay a lot because they're a little bit more expensive, all the calls that they're selling or the puts that they're warehousing, they're going to have to buy back the underlying, and it's going to happen, all throughout June. The quarterly expiration as well is very pivotal in my opinion, and so it's just a window. This is just a short window from May 16th / May 21st to June 9th, and then maybe an opportunity short comes into June 16th, but I'm not going to slam very aggressive size like I have been following the June 9th open, more or less. I would expect, if this develops something, appealing to me, I would expect, which, it's not really what I want. Doesn't really matter what I expect, but a new week opening gap down um, that could be filled into a higher low into some data sets or something. But like this TSM chart, right? There's a notable weekly wick on some volume, a little bit more volume, obviously another month than the 10% week we had on this 12th. Just no clear appealing structure to me. The kind of exhaustive 2.5% gap up and the 1% gap up on today's session that's already kind of being faded. But that deep seek gap is unfilled. I mean, we got a really nice leg of 37% off of that 212 spot from February to April. We're seeing the digestion higher. It's just a draw to an area where there's a larger amount of supply. I mean, it's a relatively simple concept. You just have to be patient and wait for the window. And I think, honestly, filling that deep seek gap will push us to new lows. We didn't take out the COVID lows. We still have an earnings gap from January of 2024 to fill. I think that this will trade. I'm going to go out on a limb and say that TSM in 2026 is going to trade sub $100, um, in my opinion, right? I'm going to go out on a limb. I don't find the appeal for this chart alongside. Obviously, we have the reversion trade, but I still think that there's a much more mature distribution that is built out at the highs of this range, where the all-time high volume coming in on DeepSeek, following the all-time high volume coming in on the October report, and then the volume coming in April on a name like this being, half, if or maybe a little bit less, or a little bit more than half, but around that halfway range of the volume that we see on those prints. So something like that on TSM, like I said. Hood, I mean, yeah, this was a great buy at $7. You have to understand how these move. I preface that every time because I see people buying this at 63 on a long-term perspective, and it's just a terrible buy. There was people that ran this, over 1,000%, not even over 1,000%, but 800, 900%, that are now offloading it to you for a profit. There's bad news hitting the tape down here. There's, look at where the highest volume in this range comes in. Look at all the negative reports. To some extent, they're hammering the bad news. They're bidding your sells. They're bidding your sell orders, and then you get the subsequent markup, the front running of this rally. And now there's a higher time frame distribution here. There's a higher time frame distribution on Palantir. And you can see it at the highs. Very aggressive, ugly looking wick yesterday as well. Something that I like to note. Come on, look at this. I mean, just pay attention, right, to the range we're in, to the progression that a buyer's making. You always want to understand that progression that a buyer's making. From the Monday, May 19th high to yesterday's high, that's a 0.4% new high established in 16 days, 11 trading sessions. The closure's even more unappealing. And you look at the hourly chart, you look at the news that we got this morning offering us that kind of changing of the hands. There are genuinely people that buy off of that news, and it's insane to me. And then we get a little bit more volume on the breakdown. Obviously, it's in regular trading hours, but failure to reclaim 597, which we faded, the Tuesday high, which we faded yesterday. The wickage on SPY and QQQ above the court ruling highs, where there was previously a lot of aggressiveness behind the sellers. Even you look at ES. I mean, this is finally fading those highs. It's an auction and there's unfilled orders, right? There's a draw into that range, and it's very notable. And it's something, it's how these things work. It's always been how these things work, and you're just seeing the ramifications. Like I said, I mean, I don't like this is a clean long, but I'm not building this out. You could trade the path of least resistance setup if you want to, if you have some balls. I guess I'm just a fucking pussy. Not really. I'm just short within this window. I have a long focus in Tesla. I think they're front running this, marking this down before this window happens, to bid it up. Or not bid it. They're bidding it lower. They're marking it down before this window happens to accumulate it within this gap. This is a chart very similar to just the sequence that we had in April and May or March. You see sitting green about 7%. It's not really what I want, but like I said, I have 15 more points to breathe here at about a pretty good delta. A 6-point delta. So maybe get I think the 80%. My first turn would be 586. I don't mind that. I don't have any crazy size on this. I took a really big loss on Nvidia, gave up a good chunk of my gains, but it's all part of the game. I mean, I don't really. The money is, the money's there, but this is my second year doing this, and the money doesn't mean as much to me as the progress and the lessons I've learned along the way. But nonetheless, Tesla, right? We had the kind of parabolic short to some extent. The aggressive run from October, the October report gapping us up, the election gapping us up, the rally into new highs into December 18th, where we saw that, buying exhaustion in the short occur, and then the markdown and subsequent lower high developed, right? And we see the breakdown, right? We see that happen. We see the draw being lower. There's not enough demand within these ranges. There's gaps unfilled below. It's something, I say this a lot. We see that happen. Oh yeah. Give me that. Give me that. I think Wednesday could be the high for the week. But we see that happen, right? And then we see the notable buyer within the October report, right? We see the wickage start to show, but we don't see anything. All right, so green about 9%. We don't see anything, insanely notable, right? We don't see anything that's like historic volume, historic like red to green closure, gap down that gets some fall through, right? We see a buyer, we see that seller pin it under 285, the election gap open, November 6th open, and then we see that pull back a little bit lower, right? We see the notable sign of a buyer, the kind of capitulation print and absorption of supply on the 10th, the decent little leg, and then the stall, and we establish a new low, kind of signaling the weakness behind that seller's effort. And then that's that notable footprint, the digestion, the rally, the higher low, pinning it above this range, and then the continuation higher. And it's kind of a similar concept here as well, just the reverse, right? We're seeing that seller, we're seeing the exhaustion, but we're not seeing a lot of aggressiveness behind it. You look at something like NVIDIA, there's a good amount of volume coming in up here. There's a very notable area within the chart where there's a larger seller that has previously, showed some intent, showed his hand a little bit. Banks are getting fucking railed, bro, and I love that. Give me fucking sub 50 on banks, and then that reversal to new highs, and then I can rail it short. But you're not seeing the aggressiveness. You're seeing a seller nonetheless. Like I wasn't long focused up here, the kind of exhaustive continuation, the breakdown and lower high, but I think they're just bidding this lower to that 298, 300 spot before those lows return. Just quickly marking it down, and they're going to bid it lower and probably mark this up to this $400 range. In all honesty, I think like 404 is pretty reasonable. This new week opening gap down from the third that we have left unfilled. Maybe even honestly pulling us up to 415, the 2021 highs again. Wouldn't be surprised. You're not seeing a lot of aggressiveness beyond a seller yet. I want something a little bit more notable, and this is going to be, something that I keep an eye out on. We still have the full gap fill here, but, if it's a bull tape into July, right, I have no issue longing Tesla. Honestly, I may just fuck off long TSLL, a 2x Tesla leverage exposure, and get like a 70% return on this. I don't think that this is a bad long just yet. Or I don't think that this is a long just yet, but it's something that I'm definitely paying a little bit of attention to going forward. If the market, turns up, but you have to be like water. You have to be like water. UNH is not ready yet. But this will probably be a long reversion trade, especially if we can pull into that COVID INWOG at 229 to 240. But yeah, I mean, there's not, I'm just waiting short. I'm still up like 65% on the year. I still think I can capitalize short side one last time before I have to give it up. I was doing relatively good in this range, except for my mishap with the original short that I began positioning on the week of May OPEX, and we got the move expiration into the end of week. Gap down on the 23rd. But then I made that little mistake with my execution. I let the noise get in as well. I let the noise get in that we will see 592, which we did. But I let the noise get in that I couldn't hold it to target at the end of the week. And then I kind of made the irrational decision to take on the new risk over the weekend. So I don't know, man. This does not look appealing either. I think we get one last leg to 227. It's just kind of, look at the structure, look at the importance of these areas, and where we're seeing this timing as well. It's all timing. There's a reason why I'm short here. and there's a reason why it's a little bit invalidated after this week. But like Mags, like look at this notable seller of Mags, right? There's a lot of weakness in some relatively important areas, being financials, being Mag 7. JPM's down 1% on the session. I think this has a little bit of room. You're seeing the exhaustion and new highs, and this can stay very irrational, like we saw in January. But just gross gap downs, leaving them unfilled, pulling back into them later on. Not some kind of sequences that I want along. Wells Fargo, right? We had the news yesterday. They're lifting the restrictions on Wells Fargo, and it's filling this May 4th or March 4th gap where we had this previous seller that got a decent little leg, then the rally off the gap fill from May 2nd and from May 12th, and we're seeing some notable volume pour in there, right? Just the little things. Berkshire Hathaway kind of just sloping downward. This isn't the most appealing chart to me at highs. I just think that a quick correction, not a quick correction. I do think a larger correction comes. Like I'm not very bearish into or bullish into 2026. I wasn't very bearish into this year or bullish into this year either. But you have to be like water. You have to be able to flow. Solar may be good, but there's nothing I'm doing on this yet. It's one of those names. I said this would potentially be an outperformer. As far as being an underperformer, seeing these sell climaxes, but being a very speculative name and a high beta name, there's a large amount of movement on this name percentage wise, and not something that I would want to front run. Something I absolutely despise trading options on, but a really nice footprint here. The sell climax is the sweep of the 2023 lows with the lack of progression. You want to understand the price covered over time, the progression from a specific party, and who's really taking advantage of that. Of the hands changing. Right, there's some selling going on here. How aggressive are these sellers? And how much progress are they making? And they're really making little to none. Right, there's bidding all throughout this range. There's decent little pops to the upside, and there's catalysts and news that are giving you these opportunities to bid this. You're seeing notable bidders, the buyers, larger ones off the election. After this report, you see the sloping breakdown, and then a quick stop. Right, we see the reversal. We see new lows bid, hands change, nice leg on the 3rd, kind of a capitulation print. On the 8th, where we see a notable amount of volume and a large spread candle closing at the lows, the nice pop on the 9th, a decent little leg, the gap down being bid, and then the sparking a 40% rally, 60% rally into the subsequent digestion, and then we have gaps to fill above. There's nothing I'm going to do with this quite yet, but I have like 5% right now. Nothing I'm going to do with that just yet, but it's one of those things. Where I'm not surprised if First Solar is going to be an outperformer this year, maybe trade up to the 200 range, potentially a little bit higher. Like I said, building out sell climaxes all throughout quarter 3 and 4 of last year. Never really giving you that kind of weekly change in character until now, where you have a really notable sign of an aggressive buyer, and then a subsequent, lack of aggressiveness behind the seller on the consolidation period off of a pivotal range, right? There's a lot of hands that was changing under these 2023 lows. There's a lot of selling that occurred, and that kind of sparked the rally and the subsequent digestion, giving you the kind of clear picture that that this isn't really done yet, right? In my opinion, at least. Shares could work. You could take shares with a 30 point stop, 30 point risk, and trade this, another 40 to 50 to 60. Hell, even 100. But it's a speculative sector nonetheless. Okay, there's a nice bidder on banks. It's a speculative sector nonetheless, and okay, there's a notable buyer within here on Tesla, which I'm not surprised. I think that is okay. like I said, I think if this markdown happens, it happens in a quick fashion, it happens aggressively, and it happens into flows. But I mean, honestly, if they pull this all the way back to the golden pocket, I don't have an issue with that 285 spot being reclaimed. This gap being filled from the bank. I don't have an issue with that at all. I don't know. There's not too much. I mean, there's some correlation going on, but it's just try to explain that. Things like this take time, bro. There's a massive footprint on the lows, a massive footprint. I mean, there's something huge that happened here, and I'm not talking about retail buying. I'm talking about a large party stepping in to save the market, a large changing of the hands and bidding of that selling that sparked an aggressive leg lower. In 2 months, we've traded 25%. That's notable. Um, Something stepped in. I don't know if it's going to be. We'll maybe see later on. It might have been the Fed. Might have been the government. It might have been a liquidity injection at the lows. But I have no clue. Um, but I think now, especially with the lack of harmonic higher highs and higher lows, I think we're just seeing the short covering rally, the flow rally. I think we're seeing the redistribution kind of take place. These things take a lot of time after such a move. For those parties to offload, their profit, their inventory, and for the hands to kind of change and spark a leg lower, and the timing is a really big factor as well. As far as things under the hood, like I said, that play a pivotal role in these markets. And then, like I said, just potentially a new all-time high push. I wouldn't be surprised, especially on Qs. These highs weren't very. I mean, you don't need a lot of aggressiveness. The exhaustion is something that can be a good signal, but it wasn't so aggressive. It just wasn't. Those highs weren't so aggressively pressed from a seller, and um, there's potential for a sweep of the new highs or sweep and new highs made. So, I mean, that's a little quick Monday briefing. Still short, up like 5%, 6% right now in July puts. I could, I mean, I have room to add. I don't really know if I want to right here at least. Um, I have 6 contracts. Yeah, I have 6 contracts on July puts. I mean, dude, I'm only gonna take fucking 3 here, 3 here. I don't want anything less than 586 to 579. That's my target. This is my window. This is my trade, and after that, we can flip long Tesla. But I mean, that's pretty much it. So have fun.